wanted to talk about the meeting that just happened today. So this morning we had the SEC and the CFTC both get together and discuss things before a Senate committee. And as you know, right, the market has been in a massive correction for the last couple of weeks. Since about mid-January, we saw from a top of about 835 billion, wiped out all the way down to just under $300 billion. So that's over $500 billion of value has disappeared. Now, before I get in and talk about what the SEC and the CFTC talked about today and what that's doing to the market, I just want to explain something really quick because I get asked this question all the time. So the market dropped from 835 billion down to 300 billion. But what does that mean? Does that mean that $500 billion disappeared? Does that mean that people lost $500 billion? Does that mean people cashed out $500 billion? Where did that $500 billion go? So let me explain that real quick. So the money didn't go anywhere. There was no money left the market. It didn't disappear. What that is that's the value of the market. All right. So let's say that you had a car to sell for $10,000 and somebody showed up and they wanted to buy it. And they said that, you know what, I think this car's been in an accident or has high mileage or whatever. I'm only willing to pay $5,000 for it. So now the car is going to sell for $5,000 instead of $10,000. So it's not like $5,000 disappeared. It's not like somebody took that $5,000 and disappeared with it. It's the value of that car has changed from $10,000 down to $5,000. And so that's what's happened with the markets. The valuation of the market has gone from 835 billion down to 300 billion. And it doesn't take much to do that. So basically what happens is, let's say just for simple sakes, right, there was a 10 Bitcoin and they were going for $10,000 each. And as long as people are buying them for 10,000, that's the value. But as soon as somebody sells a Bitcoin for 9,000, well, now everybody has to drop the price of their Bitcoin down to 9,000, and now the valuation of Bitcoin, 9,000 times the 10, has changed. Now, to make the things even more complex is that you don't even have to buy a complete Bitcoin. So as you know, Bitcoin is divisible into 100 millions. There's 8 decimals there. So basically, I could decide to buy $10 worth of Bitcoin. With $10, I could bring the whole valuation of the market down by $100,000 or more. So I say I'm willing to buy the Bitcoin $10 worth, but only at a $9,000 valuation, and that could just bring the valuation down. So the value of the market is set between buyers and sellers. Whatever buyers are willing to pay, whatever sellers are willing to sell it for. And so the valuation of the market changed. Now, why? Why did the valuation of the market change? So there's any number of factors. I'm not going to go into all of them here, but one of the big ones is that the market needed a correction. It had ran way too hot too fast, and so what I'm talking about with the valuation losing, we can also see the exact opposite happen where the valuation gets overheated. So the exact opposite would be if you were trying to sell your car for 10,000 and you had 5 people show up. And they all wanted that car really badly, and they would start bidding themselves up. Next thing you know, you could sell the car for $15,000 when you originally want to sell it for 10, and that's what happens. So, the cryptocurrency market, especially Bitcoin, right? There's a limited amount out there. You get a bunch of buyers get in. The media starts talking about how hot it is, how it's the best investment of the year, right? Going into December, how it's returned, over 1,000% return. And it's better than gold, all these things the media says, and so people rush in to start buying it. And as multiple people rush in to buy it, they bid the price up. Then it reaches a peak, and a lot of people are like, wow, at 20,000, I want to start selling, and they start selling the market down. Then the media jumps on and goes, oh, look how the market's crashing. Look how fast it's fallen from 20,000 to 15,000, which then makes more people even go out and sell it, and they see it go down to 15, 13, and then other people start panicking and going, oh my gosh, I need to get out while I still can, and they start pushing the price further, and it just pushes the price all the way down. So that's a big piece. It's really just perception and it's confidence, and that's what drives the prices. Now, what I believe has been a big, big piece of this confidence is something that we call FUD. So FUD, as most of you guys have probably heard that word, stands for fear, uncertainty, and doubt. All right, so uncertainty leads to fear because and doubt because we don't know what's going to happen. So the SEC has come in and they said, look, we think that some of these are securities. We think we need to be regulating these. We're going to come in and put some guidelines. But nobody has said what those guidelines are going to be. Then we had this big Senate committee hearing that happened this morning, which I'm going to get to. And everybody knew this hearing was going to come up. And everybody had this fear, uncertainty, and doubt, had this FUD, like what's going to happen? What are they going to talk about? What's the Senate going to say? What's the SEC? What's the CFT? What are they going to say? What's going to happen? And, I came out on some other videos and I talked about that. I didn't really think we would hear anything that we hadn't heard already. I think the SEC and the CFTC has already come out and put some pretty strong language there. So I didn't really expect to hear anything that we hadn't already heard, but we didn't know. And so that uncertainty and doubt created fear, which caused this price to come even down further. So it's already dropped so far. It's at 7,000, 8,000, 7,000. Are we going to have more bad news tomorrow? Should I just get out right now? And it causes even more panic sellers. So that's kind of where we're at with the market. That's how the valuation of the market changes. And so the fear, uncertainty, and doubt, the FUD was there because of this meeting today. So it happened. The meeting happened this morning. I watched it live, and it was good. It was a lot more favorable than most people expected it to be. Like I said a couple days ago on video, I didn't expect to hear anything that I hadn't heard already. I didn't expect to hear bad news, but I didn't really expect to hear favorable news, what I would consider good news or favorable news. And so what we heard is we had the Senate, a committee, and they were asking questions to the head of the CFTC. That's the chairman is J. Christopher Giancarlo, and then we had the SEC chairman Jay Clayton. And so they were there both answering questions from the Senate committee. And what I did see is that most of the Senate, they just don't know anything about cryptocurrencies and blockchain technology overall. I think really they were just, if anything, any of their information came from headlines, is it used for terrorism? Is it used for illegal activities? Those types of things. Do we believe that this crash is causing undue harm? Are people losing their money? Without really understanding it. And of course, this was a hearing so that they could understand it better. But what I liked is that both the chairman of the CFTC and the SEC seemed to be pretty knowledgeable. I was impressed with the answers they came up with, and they both seemed to be knowledgeable not just in the fact that, of cryptocurrencies, but really in the differentiation between them. So they kind of specified that we have two different types where we do have coins that probably are securities, and we should probably regulate as securities, but we also have a utility. And actually the chairman of the CFTC, Giancarlo, said that it's important to remember that if there was no Bitcoin, there would be no distributed ledger. Distributed ledger being another word for blockchain technology. So blockchain is a specific technology, and there's other technologies similar, and so generally they're called distributed ledger, just to catch you up on that. But he understands that. And he said if it wasn't for Bitcoin, we wouldn't have this. And then he drew in the differences of them and why even if we need to look at Bitcoin as currency and money and the banking and all of that, we have to look separately at the technology. And so I was really happy to hear that because we have over 1,500 cryptocurrencies listed on CoinMarketCap right now. I don't really like that word I don't really like that word cryptocurrencies because I believe it's a little bit misleading because they're not all currencies. All right. So that was the word that kind of came out when it was Bitcoin, and it's crypto. It's cryptography, the way they secure it, and currency. It's meant to be money. But we have all these other ones that aren't meant to be cryptocurrencies. They're not meant to be money. Most of them are utility plays. So a lot of them are coins that you would use on that platform. So think about like your airline reward points or Target reward points or something like that. You can use those points within that network to redeem them on American Airlines or redeem them at Target, but they're not currency. And so I don't think it's fair to look at Bitcoin in the same way we'd look at a bunch of these other ones. And so anyway, back to the meeting. So the chairman of the CFTC brought that up, and he said, hey, if it wasn't for Bitcoin, we wouldn't have this, but it's important to look at those separately. And so what I like about that is it tells me that they're in line with how I would like them to think, and they're in line with looking at them differently, and they can start to regulate and put rules and regulations in differently, as opposed to using a very broad sweeping brush that just blankets everything that shouldn't be qualified that way. So having that understanding and understanding the differences was huge, I thought. He also, I could tell he really knew what he's talking about, because he gave a very insightful look and kind of a description to the Senate on what blockchain technology is, and what we could potentially see, solutions to problems in the future. So we talked about, medical applications, banking applications, intellectual property applications. And I mean, most of the people that I see on the media these days, on CNBC or wherever, they don't even understand this. And it's actually been pretty disappointing to me to hear what most of the media has to say about this. But he seemed to know what he was talking about. And you could tell, whenever somebody can take something complex and explain it, easy to understand, that means they have a good understanding of it. And so it made me feel like he has a good understanding of it. The chairman of the SEC, Jay Clayton, the same way. He seemed to be pretty favorable. He seemed to be very informed. And, he seemed really inclined just to let things go. I think both of them recognized the huge opportunity that we have with this new technology, not only to change, to solve a bunch of these problems and solutions that we have, but even just to let the technology grow for jobs and business and revenue and taxes and all those things. And so they both seem to kind of give it an approach where they kind of want to be a little bit hands off and kind of let to see what happens. I think, the Senate committee kept asking about, should we have increased regulations, and are disclosures enough? And, they kind of said, well, we have disclosures now. How well is that doing? And what do we think? And so that was really good. I think overall, basically what the CFTC and the SEC basically kind of said in unison is that, they're going to let it grow. They're going to let the technology continue to flourish. They were not going to over encumbrance it with regulations. They even said that they're not looking to pursue further regulations onto currently operating cryptocurrency, current cryptocurrency exchanges that are already out there, and they just want to let them innovate and grow. So overall, it was massively bullish. Bullish being good. For the overall cryptocurrency space. And as you can see, if you've been looking at the charts at all today, the markets have responded. I mean, it's gone up huge today. We are up big. And now at the time when I prepared this, we were up, Bitcoin was up over 25%. Ethereum was up over 32% on the day. Litecoin was up 30%, and Neo was up over 50% on the day. So the market's been responding. It wasn't only me that heard bullish news. The rest of the market did as well. And so everybody's like that. And so, like I said at the beginning, what this does is it takes away a lot of the fear, uncertainty, and doubt. Now, I was hoping that they would come up with something more concrete, like, hey, these are the guidelines we're going to put in place, and this is the date you'll expect to see them. I was hoping for something more concrete to get rid of the uncertainty. But I think basically what they said does take away that uncertainty, where they said, look, we're not going to overly regulate this. We're going to give it room to grow. Yes, we're looking at these things. We understand the differences, and we're going to treat them differently. So it was huge, I think in addition, we saw, I talked about earlier, some of the crash that we saw in the last week was almost kind of correlated, or I should say orchestrated, to kind of all come at the same time, where we had news about China, banning cryptocurrencies for the dozen time in a few months. I mean, it's dead already, so they're going to kill it again. I mean, that market makes up almost 0% of the global volume anyway. But that came out at the same time that, the SEC or the government regulators were going to start to subpoena records from Tether, and then all this Tether news started coming out, or FUD started coming out, and Tether's been propping up the Bitcoin price, and Tethers have been printed, and the Tether printing is exactly correlated with the price of Bitcoin pumping, and if Tether crashes, it's going to unwind the whole market, and Bitcoin can go to 1,000. And there was all this news that almost was orchestrated, all came out together. And going back to market sentiment, it's interesting to see how, like I said, the market sentiment is what drives the price. And so when things are going good, the sentiment is high and the media is backing that. But as soon as it turns, it's like they're almost waiting for it to fail. They all jump on it at once. And so that's why it seems a little bit orchestrated. Not trying to say that it's part of a greater conspiracy, although I'm not dismissing that either. But we did see a lot of that. And so with in regards to Tether and that FUD that came out, we had some PhDs come out and do some additional studies into that, and they released that they do not see that. So these PhDs put this study together, and they looked at every single Tether printing, they looked at all the prices, they looked at the movements, and they said that it is not correlated at all. So who's right, who's wrong, I don't really know. We have two different sides. And guys, I'm going to get to some questions and answers. I'm going to finish this, then I'll get to some questions and answers. So go ahead and put those in the box, and I'm going to try and get to those as best as I can. So anyway, the Tether FUD, now we're seeing reports that say that maybe all that news that we got isn't true. And so that was good. And what I would say just from a long-term, forecast or outlook is from a fundamental basis, I'm extremely bullish. I'm not talking about technical indicators and support lines and resistance lines and whatnot. I'm talking about fundamentally the rules, the regulations, the technology, all of those things that we know are true, right? We have positive regulatory news coming out of the US and Korea. That's extremely bullish. With Bitcoin, which, Bitcoin drives the market, so we can't ignore it. It's the king of the crypto space. It's the reserve currency of the crypto space. I mean, last year all the FUD came out about them because of their scaling debate. They weren't fast enough. Their transactions were too steep. Well, Bitcoin's about to roll out the Lightning Network, and that is going to change everything. Now, I can go on a whole nother conversation and talk about why I don't think they need to fix their scaling problem, but they are about to roll out the Lightning Network, and that is going to change everything that we know about it, and that's fundamental, right? This is development, this is concrete factual information, and it's fundamental. I believe it's going to change things, and we know that it's about to roll out. So Coinbase has announced that they're going to add SegWit support. So this is not rumor, this is directly from Coinbase. They're going to add SegWit support. The importance of that is they need to roll out the SegWit support for the Lightning Network to launch off of that. So that's huge. We can see that the market is still super healthy with tons of buyers ready to get into the market, because we saw like Robinhood announced, was it a week or two ago, that they're going to start doing cryptocurrency trading in only 5 states. They're going to roll out 5 states to begin with. And in less than a couple of days, they had signed up over 1 million people onto their waiting list. So that shows the demand. So we have massive demand, people wanting to come in. The fundamentals are there, and we're extremely bullish. Now, obviously, this correction was massive. It was one of the biggest corrections that we've seen. And if you're new to crypto and like less than a year old in the crypto space, it was probably the biggest that you've seen. And so I do want to give you a little bit of information about that. Now, how do we handle that? How do we handle these market downturns? So first of all, it doesn't. This is not cryptocurrency specific. This is in any market that you're in. I don't care if it's stocks, bonds, whatever, real estate. You don't buy tops and sell at the bottoms. I mean, that goes without saying. It sounds super simple. It's a little bit more complex than that. But you don't buy the tops and you sell the bottoms. You're supposed to buy the bottoms and sell the tops. Now, Warren Buffett has been famously quoted over and over again, saying that the market is a way to transfer money from the inpatient to the patient, right? So if you get into this with the right perspective, long range, like I understand I'm getting into a technology that's not really used today. I understand it's going to take a year or two for this technology to get built, and then it's probably going to take a couple years for this technology to be adopted. Now I have this long-range perspective. Now I'm patient. I'm willing to wait for 3 or 4 years. All right? It's the inpatient that have a problem. Now, this kind of leads to the next thing, but if you can be patient, if you can wait that out, then you're not going to be stuck in that transfer of money where you give your money away, right? So all those people that rushed in and bought Bitcoin at 18, 19, 20,000, those are all the people that sold at 7, 8,000, 7,000, and they're giving it to me, So now I'm buying it at 7,000 from all the people that had bought it at 18,000. I didn't buy it at 18,000, right? See how that works? Now, The problem is that our human psychology works against us. Um, it's really hard to be successful in any market. Again, they're all the same because of our human psychology. So we're motivated by two things as human beings. We want to move towards pleasure. We want to move away from pain. So when the price is rising super fast and super high, we want to rush into pleasure. I want to jump on that bandwagon. I want that pleasure. And that's the wrong thing. When everybody's jumping on, when it's driving up, we don't want to get in. And likewise, we want to move away from pain. So as the price is dropping, that hurts. I'm watching my portfolio drop. I want to save whatever money I have left. I'll take the 50% loss just to save what I've left. I want to get away from the pain. And that's what human psychology does to us. But to be successful, we have to work the opposite way. So we have to buy when it's low, when nobody wants it, when everybody hates it, when everybody's fearful. And we have to sell when everybody wants to buy and everybody's being greedy. All right. So, the problem is that, like I said, when it hits 18,000, everybody wants to buy. And then you hear all these people saying, oh, you're so lucky you got in when it was 5,000 or 7,000. I wish I got in when it was at 7,000, but now it's 7,000. But, and then everyone's saying, oh, it's crashing. I want to get out. I'm going to sell at 7,000. Get out, get out, get out. But you see how that works? When it was at 18, they wish they could get in at 7,000. But when it is at 7,000, they don't want to get in anymore. So that's the thing with our human psychology. We have to be able to work against that to be successful. And here's how you combat that. All right. So here's what you can do. Now, like I said, Warren Buffett said that the markets move money from the impatient to the patient. So we can combat that. We can be patient by a couple things. One is small, rational position sizing. All right, that's the best way. So you're going to put a little bit of money in. These are asymmetric returns. That means we can make huge returns off of a little bit of money. I mean, you could see $500, like with Ripple, for example. If you would have taken the recommendation we put out at 17 cents, $500 would have turned into over $20,000. $500 is, if you lose $500, it's not the end of the world for you, most likely. But 20,000 is a lot of money, right? So only put small, rational position sizing in, all right? That way, when you see the $500 turn into $100, you're not that worried about it. If you put in all your money on one play, it's your rent money, it's your bill money, whatever, then you start to panic and you have to get out. But if it's small, rational position sizing, then you can ride it out, all right? We have to understand our human psychology, work against that, use the small position sizing, and only invest what you can afford to lose. If you could go to Vegas or a night out, a weekend out and drop $300 or $400 and not really think about it, then put $300 or $400 in. If you lose it, it's not that big of a deal. I mean, I know guys who will put a couple $100 on a football game, no problem, right? So think about it in that sense. Now, because if you're using big position sizes, money that you can't afford to lose, then you get forced to try and recoup some losses, and you're going to sell at a loss. The other thing is just don't worry about it too much. You don't need to refresh all the time on CoinMarketCap and Blockfolio. You don't need to read every news piece. If you've kept the first two, which is small position sizing, irrational position sizing, and money you can afford to lose, then it doesn't matter. You don't need to be tuned into it all the time. The other thing, and this is what we do all the time, is we take profits along the way. Just over the last couple of months, we took massive profits on Vertcoin, massive profits on Litecoin. We sold Litecoin. We took profits on Litecoin at like $350, right at the peak. Took max profits, and it dropped all the way to like $100. But you know what? I didn't care. I wasn't really worried about Litecoin dropping to $100 because I had just taken like 10 times on my money out at $350, and what I was holding left of Litecoin was all for free. I had no risk there. Now, on paper, it hurts watching that money drop. It does. But I can know that I have no risk. I've already taken like 10 times on my money out of the market back into my bank. The position I have left is all house money at that point. And like I said, nobody wants to see their paper profits dropping, but I had no risk. Even if the market went to zero, I had no risk. And that's what we do. So we take profits along the way. We did it with LTC. We did it with XLM recently. And we just did it with XRP earlier this month, or I'm sorry, about a month ago now. So we take profits along the way. And that's it. So small rational position sizing, only invest what you can afford to lose. Don't pay attention too much. Don't overthink it. And then take profits along the way. I look at, you can look at like money in, like paper profits versus money in as well. And you're only going to take a loss when you sell, so don't click that button, right? It takes a lot of mental strength, a lot of mental toughness, and patience to be able to hold through that, right? So you only lose when you sell. Have the patience, like Warren Buffett said, the market transfers money from the impatient to the patient, so be that patient person, all right? So that's it. The SEC news, it was extremely bullish. The market's rebounding. Most of the positions, the big cap, are up anywhere from 30 to 60%. Some of the recommendations we put out just a few days ago, I saw ICX is up 60%. So it's rebounding really fast. Now, nothing goes in a straight line, so we're not going to go straight like this. A couple steps forward, a couple steps back. But it appears that we're in good news. The SEC, the CFTC understand this. They're going to let it grow, and that's the good news. So that's all I got for today, and let's enjoy this next ride up.